Hey everyone, in this video we're going to look at Taiwan Semiconductor Manufacturing's stock price and the underlying business to see if it meets value investment criteria. We're also going to look at some of the company's financial figures and do a calculation to see what the stock should be worth. Okay, so as advertised, I'll be donating to charity for every like, comment and subscription up to $100 for this cycle. Likes and comments are 3 cents each and subscriptions are 4 cents each. Further details will be in the description below. Now let's get to the analysis. To start, we want to look at the profit before tax and expenses. This will tell us the margin or percentage of money a company keeps before tax and expenses. 40% or more is desired here, very close to 40 is okay as well. Next, we want to look at the profit after tax and expenses. This is a measure of a company's net profitability and we're looking for 20% or higher. Next up is retained earnings. Here we want to see steady growth. If it's not growing steadily, then the money the company is earning is not consistent year on year and can be a result of volatility. Next is the return on equity. This is a measure of the profitability of a business in relation to the equity or money the company has. Generally 15 to 20% is good, but it can vary between industries. Next, we want to see if the company can pay off its debt in less than 4 years. The shorter time to pay off the debt, the better. Next, we want to calculate the capital expenditure to income ratio. The lower the better, so less than 25% is great and less than 50% is acceptable here. Okay, for Taiwan Semiconductor Manufacturing, they passed in 4 categories, got 3 out of 4 in retained earnings and failed in capital expenditure to net income ratio. Hey everyone, if you want to keep up to date with my videos, remember to subscribe and set notifications to all. Okay, we're going to calculate the intrinsic value of TSM stock using the EPS growth rate and PE ratio from Yahoo Finance. For TSM, they are showing a fair value estimate of 161 and a buy price of 80, but given they had multiple years where their capital expenditure was greater than their net income, there might be a fair degree of risk involved in buying this stock. Also, a quick legal disclaimer, I'm not a financial advisor and this should not be taken as financial advice. Please consider talking to a financial advisor before making investment decisions.